morning and welcome to Saxo Bank's live market call. Today is Thursday, December the 13th. Yesterday was a rather active trading day, both with the central banks, namely Fed and ECB, coming out with a co-statement of easing credit as well as a string of economic releases. Just to mention some of the most important ones, we had Eurozone industrial production beating estimates coming out for the month of October at 0.4% against an expectation of 0.2%. So we are still seeing somewhat healthy industrial expansion within Eurozone. Up in Norway, we had what was largely expected from Norwegian Central Bank, the announcement of a 25 basis points hike. So the Norwegian key interest rates have now risen to 5.25. Interesting that they are already 1% higher than the Eurozone rates. Later in the afternoon, we had the U.S. trade balance, again for the month of October, coming out pretty much along the expected lines, showing a deficit of $57.8 billion, and this was against an expectation of $57.4 billion deficit, so no surprises there. Later in the Asian session, we had a string of Australian figures coming out, and I think the most important one, or the most interesting one, was the consumer inflation. This figure, expected figure actually for December, came out at 14.2%, with the prior figure at 13.4%. So we are indeed seeing rapidly rising prices and expectations of continued price rises in Australia. On the markets, yen has somewhat steadied after a major yen selling action yesterday. We actually went up to 112.46 on dollar yen, and after the steadying, the yen basically was around 111.60. Euro dollar is firmly over 147 with somewhat uncertain direction at this point, with high yielders as well as carry trades well boosted after the announcement yesterday from Fed. On the equity markets, we had somewhat moderate gains in the American session, but they completely failed to follow through in the Asian session, with Nikkei down around 2.5% and Hang Seng around 3%. So there was a very big contrast between the equity price action in the American versus the Asian sessions. On the fixed income, as it would be expected, the treasuries are rising on a sentiment that the central bank cash injection is simply not enough, and that it would simply work to stoke inflation on the longer run. JGBs again rallying on equity losses, and European bonds were somewhat mixed with lower yields and higher bunds. On the commodity front, the crude price is steadied around $94 a barrel, and this is after a tremendous gains of 5% in yesterday's trading session. Basically, this was on again on the news of Fed easing credit and on a draw on stockpiles. Gold and silver, likewise, marginally lower. Gold spot now trading around $811 and silver spot around 14.64. So what's going on in the marketplace? Well, the big theme obviously is the Fed and ECB sort of co-statement. The direction that Fed seems to be taking is that although the rate cut was not necessarily as high as some of the most bullish investors had expected, they're basically following through some alternative means of injecting liquidity in the marketplace. They're doing it by auctioning short-term funds to banks, but they're also doing it by basically placing US dollars with ECB and Swiss Bank. So the reaction to this is somewhat mixed. At very initial stages, we basically sort of, again, carry trades going up, high-yielding assets rising. It was basically good, perceived as a very good news also in the stock markets. But later on, sort of realization started to come about that this is not necessarily a fix to credit problems, and this is only a temporary sort of medicine, but not something that would solve the problem from roots up. And this obviously was sort of mixed sentiment was reflected in the equity market action. As we mentioned, the American equities did manage to close marginally higher, but this was not followed in the Asian session. Same effect on the crude prices, sort of immediate expectations of rising inflation were displayed in crude prices climbing up to up and about $94 a barrel before steadying around this level. Today's calendar action is filled with some interesting data releases. Actually, at 8:30 GMT already we have the Swiss bank announcement, key rates for the 3-month LIBOR target. The market consensus at this point is for unchanged rates at 2.75%, so this is going to be in about 15 minutes or so. Later in the afternoon, we have very important U.S. retail sales figures coming out. This is for the month of November, so it's inclusive of the Thanksgiving period. So it will be very interesting to see exactly what those retail sales will indicate. Just in particular, we will have advanced retail sales expected to come out at 0.6%. Retail sales, less autos, again, for the same figure of 0.6%, and also some pre-employment figures, as we will have initial jobless claims and continuing claims for the month of December. Tomorrow we have string of German CPIs being released, and going into next week, sort of obviously nearing the Christmas period, we have the Norwegian trade balance on 17th of December, as well as a string of US data, namely NAHB housing market index, as well as empire manufacturing and current account balance from US on 17th of December. On the FX side, we are basically looking to buy into rallies in euro dollar. The key level at this point would seem to be at 1.4750, so we are looking to establish long positions at the break of this level. On the equity side, we actually have a recommendation to sell British land trading in London Stock Exchange. Obviously, as the housing market in Britain is basically suffering or continuing to suffer, and tracing the developments in the US housing market, British land will be one of the companies taking a blow or continued blow. Our entry range is 910 to 930. We are keeping a stop loss at 952 with a target of 837. That wraps it up for me today. Thank you very much for joining us. See you again tomorrow. Bye-bye.